Hi, I'm Suning Struby, Chief Product Officer at JUDI.AI, where we can help you lend more with less risk with our small business lending analytics platform. Not only can Judy grow your small business portfolio, but we can provide you with real-time insights into the financial health of your customers, ultimately making a better banking experience for everyone. The key difference in Judy's solution is the inclusion of cash flow directly from bank statements, which can be used in both decisioning and monitoring of small business loans. As you know, the economics of small business lending are challenged. Not all small businesses are the same, and there's many variables to consider. There's a lot of work and effort involved. Existing methodologies and data sources are opaque and obsolete. Financial statements are not relevant or timely, especially in the current environment, not to mention underwhelming customer experience. Judy can solve this problem by providing instant cash flow analytics into the decisioning and monitoring processes directly from bank transactions. We do this successfully with our clients, which I will show you in the next few minutes. So imagine that I'm a small business applying for a term loan to purchase a piece of equipment that is integral in helping my business run day to day. For emergency purposes, I'm also going to apply for a small line of credit just in case. I go to a bank, my FI, to apply for a loan. They're not my bank, but the bank is offering a good interest rate, and the application process seems quick and easy, and I can do it from the comfort of my home. So to fast track this data entry steps, I'm going to pre-populate the application. First of all, I need to provide information about myself, the business owner. Then I need to provide information about my business, legal business name, and an address. Judy can easily configure additional business rules and gates according to your credit policy. And finally, I need to provide my bank transactions. There are many secure options to access this data, but I want to know now if I'm approved for this loan. Otherwise, I'll go to another bank or lender. So I take the path of least resistance and connect through online banking. I connect to DAG site, my bank, where I currently do my business. Through a secure and account aggregation process, I submit my user credentials in order to connect the bank transactions for my business operating account. No more reconciling financial statements. So the final step is to submit my application. And this is where Judy does something that no one else can do. Judy's proprietary credit model includes the traditional credit scores and alternative cash flow data to determine what my probability of default is to pay out this loan in the future. At the core of our platform is our proprietary categorization engine, which in real time identifies the source, purpose, and diagnostics of each transaction in my bank statement, using machine learning to pull out risk indicators and anomalies, such as NSFs and large transactions. From the transactions, Judy calculates a debt service coverage ratio, which is used to make the final decision. As a lender, you can decide what your risk tolerance is and include any additional business rules, such as excluded industries or minimal revenue, into the credit decisioning process. Now, in these few seconds, Judy has made a decision based on my credit scores and the instant analysis of cash flow. So now let's see what a lender sees at the bank, in this instance, my FI. Let me describe the user interface quickly before I dive into the details. The primary navigation is along the left-hand side, identifying the loan that I just submitted. Along the top are the stages of the application, and then the next panel is the actual risk score and probability of default. And since I know as a lender I only lend to borrowers with a C+ and higher, this is an easy way to know that this is the reason why I approve the loan. The debt service coverage ratio on the right-hand side is presented with two metrics, which is relevant in today's environment due to COVID, which is the ratio before March 1st, before many of these small businesses were hit by the pandemic, and then also the overall ratio. And these proxies are calculated from the real-time bank statements that were connected in the application. Additional traffic light signals allow me as a lender to quickly assess the risk profile of the applicant. And although my experience scores are green, the overall debt service is red, which makes me pause. What else do I need to know about the financial health of this business? So I can see also from this screen that Judy has calculated my monthly average financing, the total over here on the right, and also my monthly average operating cash flow metrics. And these are the metrics that are used to calculate the debt service coverage ratio. So let's dive into these metrics for a few more details. First of all, what Judy does is it looks at existing financing payments. So it looks that this business has an operating line that started in December, some merchant advance payments and loan payments. And this is done reported on month by month. You can see that there's a large payment, probably a down payment on the line of credit in April. And you can also see that there was an increase in merchant advance payments in the months of July, August, and September. Now, let's look at the operating cash flow of the business. So as expected for this borrower, the cash flow dipped during the initial months of the pandemic in March, April, and May, but it looks like it's bouncing back. So looking a little bit further, we can look at the monthly operating cash flow metrics, where we can see also the number of deposits and withdrawals that are made on a monthly basis. Now, since the operating cash flow covers the future debt payments, and there's also the annualized total of almost $60,000, it looks like this lender is not really missing any loan payments. Me as a lender, I don't need to identify any triggers or alerts to require a depot manual review of this account. So these are just some high-level insights a lender can glean from analyzing the overall cash flow data.
Hey, Suning, quick question. Sorry to interrupt, but I'm just curious, how relevant is cash flow in Judy's decisioning process?
Yeah, that's a great question. It is really relevant. In our analysis of over 37 total of our applications, these were filtered out due to poor cash flow metrics. And the overall result of those 25% were declined. And so that's a large percentage that would actually not be filtered out due to poor cash flow metrics. Now, these cash flow metrics and insights are not only used for one point in time decisioning, but can be pulled seamlessly into the financial monitoring module that I'm going to show you next. So similarly, it uses the same cash flow metrics, and I'm going to look at a bit of a different borrower's account. So this account was funded last year in November 30th, 2019. And along the top, you can see the monthly polls. It's a result of each month of the cash flow analysis for that month. And you can see in July that there's a red alert. Anything with a check mark or a circle indicates either that it was in good standing or those issues have been resolved. Now, the next set of traffic lights are the exceptions on the account for July 2020. So you can see that there's one alert and then three alerts that are green. Now, these risk indicators are derived from our cash flow analysis, and they've been included because they're either predictive or correlated to future defaults and delinquencies. And these are the debt service, the net operating cash flow change, number of NSFs, and missed tax payments. And by no means are these the complete list of risk indicators from Judy. We have over 40 risk indicators that we can use to signal an increase of risk on any individual account. Now let's go and look at the details of the bank transactions and the actual exceptions. So first of all, with this graph, I can get a quick snapshot of the operating trends month by month. So cash flow is represented by the green and the red bars, as well as the DSCR calculations represented by the line graph. And this analysis is the exact same categorization logic, an analysis used on an individual loan. It's used also on a monthly basis to help monitor this account. So knowing that this account was executed, or this loan was executed in November, I'm actually not interested in anything prior to November. It looks like it was pretty healthy. This is why the loan was approved. I'm more interested in the preceding months after the loan was executed. And you can see specifically here that there was a big dip, obviously representative of the pandemic. So even though this business looks like it might be coming back in the months of July, there are that negative trend that needs to be considered in this analysis. So I'm going to go into a little bit more into the detail of those transactions themselves. So you can look sort of on a transaction level of what's going on. And so this report here displays how Judy's categorization engine automatically assigns categories to each and every transaction and presents these categorized amounts on a monthly report. So for example here, the main source of revenue for this account is merchant revenue with a monthly average of $38,000. But you can see here for April, May, and June that there was quite a dip, quite lower average merchant revenue compared to the average. So this is probably expected, as you saw from the graph, and probably this business had to close its doors during the pandemic. More interestingly, you can see that there's two NSFs here for May and June that may require a little bit more investigation. However, we're just looking at July. The fact that there's no NSFs, it's not a trend. It's not a continuing trend for that month. Moving down a little bit more to the withdrawals, a couple interesting things. You can see with payroll, the average monthly is around 36,000. There looks like there was a bit of a dip in payroll for April, May, and June. And unfortunately, businesses have to make hard decisions, and maybe in this case, they laid off some staff. A couple other things to note, we can see some tax deferrals, but there's also some good signs. Mortgages, insurance payments, utilities. There aren't any missing payments here. So these show that this business is actually persevering and may actually bounce back from the pandemic. So ultimately, as a lender, you can decide what actions to take according to your credit policy and risk threshold, and if this is an account that needs further investigation, or is it something that you just want to continue monitoring month over month. So this immediate insight into cash flow up to the last 30 days is really incredibly powerful. And with financial statements, you can't get this insight immediately, and you can't identify potential alerts that would make that account go into a default. And this ultimately can help better manage your portfolio level loss rates.
Okay, so last question, what can this module replace?
So this can either replace or augment standard annual review processes with cash flow, and it can be also used to monitor only highly risky accounts. So these can be included with any other additional metrics that is part of the credit policy. So in conclusion, now more than ever, when personal credit scores are lagging indicators of credit risk, alternative data is absolutely necessary for lenders to gain a more complete picture of the financial health of their small business portfolio. Judy provides immediate access to cash flow metrics for bank transactions for both instant decisioning and ongoing monitoring accounts, so you can lend more with less risk and ultimately modernize the relationship lending experience with your customers. Please reach out to us at judy.ai or visit us at our virtual booth.